Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for Sunday, March 23rd, weekly candle close. I hope everyone is ready for this coming week. Before we begin, please give me a like, give me a subscribe, a follow, whatever it is that's on the platform you are watching on. And as a thank you for doing that, here's a picture of a really cute bunny. All right, without further ado, let's get in the charts. All right. Oh, actually, I wanted to start on the weekly chart. All right. What are we seeing here on the weekly? Well, last week, I was talking about how this was a reversal candle, spin top candle. And hey, look at that, reversed up. Did not get as high, as we would like, up to that 95 area. Would be great. Back up there, back into that range, this range here, instead of creating a new range here. But hey, our weekly candle for today, or this week's candle that's just started, has already started turning green. So that's great. There's still 6 days and 23 hours left of that candle, so anything can happen there. But last week's candle, let's go over the numbers, the ones that are up here, for this week, this past week's candle that just closed. Okay, so we opened at 82,622. We had a high of 87,500. We hit a low of 81,200. And we closed at 86,130. This is great, We got a weekly candle close higher than last time. So great. Wonderful. Let's see if we can keep this recovery going. This could be a Nike swoosh style recovery. That's when, you know what a Nike swoosh looks like. It comes down fast and then comes back up slow. So it possibly could be a Nike swoosh type recovery. However, there it is. However, we could also be seeing what is looking like a small little bear flag there. Small little bear flag there. Just like that. And just like that. And if we were to see a breakout from that bear flag, well, that would play down to about 71,944. Yeah, it'd be a new low. It'd be a new low, and it would kick us out of this retracement here. And as you can see, this retracement, which is pretty much the same as the one on the daily, is showing us right now in bouncing out of the golden pocket of that fib retracement. And if we were to, this bear flag were to play out, at least to where the breakout point is telling us it would, well, that would most likely invalidate, not invalidate it, but it would get lower, price action would get lower than that 786. And usually when things get lower than that 786, well, they don't tend to bounce back. At that point, they're back at, starting points. And at that point, it would be like a head and shoulders forming. Shoulder, but we'll get to that if we get that low. If we get back down here into the 69 area, if we break under 70, and by we I mean Bitcoin, but if Bitcoin breaks under 70, then we can talk about this possible head and shoulders on the bigger time frame here. But for now, let's just say that bear flag is possible, but we're still in this bull flag. As you can see, I'll even bring out the top of that range a little bit there. But yeah, if we can, break out over this, then we got some good break out over that downward trending resistance of the flag here. If we can break out over that, which is hanging out currently at like 95. If we can break out over that, then we have a chance for these higher moves to say, hey, the game's not over, bull run's not over. Where did the shorter one come from? The shorter one is here. If if we had to draw the bull flag that way, and the long run is the current drawing of the bull flag there, from there to there. Oop. See what I mean? Anyway, so yeah, this one, the lower one, 115, higher one, 150. Those are our targets if we do see a reversal out of here. If we don't, however, well, we got the 50 that's supporting us currently, okay? So if we look at when the weekly candles have come down to the 50 before, during this bull run, we'll just look at. So we'll start from the beginning of the bull run. Where do I count the beginning of the bull run? Here, at the bottom, when the trend reversed. Yeah, we didn't know it was the beginning of the bull run then, but it was the beginning of the bull run then. From 16,000, 15,000, 15,500, whatever the bottom actually was. It's around there. We came up, crossed over the 50 here on, no, like actually crossed it here on March of 2023. We came back and tapped it in September of 2023 and then took off running. Came back and tapped it again here in September of 2024. Took off running. Here we are tapping it again. So the question is, are we going to take off running or not? You see the weekly breaking under the 50 again, that's bad news. So you'll see that here in the last bull run was a similar situation. Let's take a look back at the low from there. That would be where I would say the bull run started. Came up, crossed the 50 here in April of 2019. Came back to the 50 here, crossed under it a little bit, but didn't bounce off of it, but it crossed it and came back to it. Anyway, December 2019. And then it would have taken off, but COVID hit, but that's that COVID dip right there. Would have been a good time to buy Bitcoin. Anyway, then it recovered and continued upwards, staying over the 50. Even coming back to it here for that summer slump that we had in 2021. Came back to it again there. Here was our high. And then we saw it actually break under the 50 here in January of 2022. And it would not break over it again until that March 2023 area. Dates, whatever. So yeah, that's a major sign for us. We're going to watch for that 50 to break under. And look at this. When the 50 did break under, yeah, it bounced back up and bounced off the 50. So there might be another dead cat bounces coming. When we break under, there's still maybe a chance to, you know, bounce back up and get out. But it came all the way down to the 200. And then it stayed under the 200 for a little bit until we reached bottom, bounced back, and yeah, you know the rest. So watch the 50, that orange line, the 50 moving average here on the weekly. If we lose it, which if this bear flag that we were talking about hits, then we will. Well, if we lose it and that bear flag hit, or if that bear flag hits and we lose it, well, in that case, we're going to see, you know, the 50 broken. And then at that point, we can maybe watch for it to come up, test it again as resistance. But we're probably heading back to that 200. Yeah, it's at 45 now. It'll probably get closer up to 50 by the time that we get there. We're seeing, what were we seeing? We're seeing about $400 worth of gain. Yeah, we can just say $300 worth of gains every week. So that means that, you know, over, let's say 10 weeks, we'll see like about 3,000 more of gains from 45.4, which would bring us to about 48.4, right around there, just right around that 50. So yeah, watch that 50 moving average. And then pay attention to where the 200 is if we lose it. All right, real quick, I'm going to go over these lower time frames now. So from the 90 minutes, that diamond pattern that we talked about yesterday did play out. Look at that. Said it would come back the way it came back the way it came, pretty much right exactly to where it needed to. Delete this diamond pattern now so it's not clogging up the chart. All right, so we are breaking out of the bull flag. Now the question is, how high is it going to go? Okay, so we'll move that out just so we can kind of gauge it a little better. 88.5 is our target. We need to break over our high here, right? So we were talking about this yesterday. We need a new higher high. Wicks don't count. This is technically a flat high, same high. You know what I mean? It could even be a double top if you want to call it that. But here's the real point we need to reach. We need to reach over 87. We need a candlestick going over 87. Excuse me. A candlestick over 87 to perform that higher high. Zoom out just a bit. Too far. Move this over this wheel. Now we can kind of get rid of it. We popped out of it. You saw the golden retracement here. Popped right out of that. And yeah, popped off that 618 as well. And now we're here. So yeah, we can get rid of that as well. And we're watching for this to move up. Otherwise, we're seeing what kind of looks like a wonky double top. And if that double top hits, well, then we're going back down over here to about 81. Hopefully, we'll get stopped by the 82 support there. Again, if this double top hits. Possible double top. Because we're still in the making of this top. Like it could come back up and break out still. All right. Look at this. The squeeze from yesterday that we were looking at. Well, it broke out to the upside. It's actually great because breaking out to the upside here out of this squeeze kind of implies that we may be breaking out to the upside out of this squeeze here on the 6-hour chart. And if we can break out of that, that'd be great because, hey, man, we need to get over that 90 key resistance to, invalidate this bear flag and tell us, hey, we're not going down this slow yet. Eventually we will, but not yet. At that point, we'll have, to cross both the 90 and the 200 on the 6-hour here. You'll notice we are over the 200 on the 90 still, so that's great. Stokes are pointing to the downside, though. RSI could get stopped here on its signal line, find some support and keep running, but if not, we want to see it just stay in bullish territory here over the 50 and reverse there while the Stokes come down either all the way to oversold or they, stop short and curl and back up. Let's take a quick peek at the 22 just to see what that's telling us. Oh, look, the 22 Stokes are pretty low. They might start curling back up now. And look, this is exactly what we want to see on the 90. We want to see the RSI stay in bullish territory, continuing this upward trend. We're over the 200 here as well. 5 minute? 5 minute over the 200. RSI looks like it's turning around. We're coming out of oversold on the Stokes. Okay, the 1 minute, however, is back under its 200, but it looks like it's turning around as well. It's having some trouble breaking back into bullish territory here on the RSI, so we really want to see this 1 minute chart get back over the 200 because that'll push everything else. If it can't, that'll push everything else back down. And then you will have all these 200s and 85 to act as support, and hopefully it stays over that. Looking pretty good, honestly. All right, so the 90 minutes. 90 minute, done. I told you what I needed to tell you there. 6 hour, we are getting into overbought on the Stokes here, but like we were talking about with the 22 affecting the 90 affects the 6 hour. So with it pointing to the downside, this might actually start coming back down as well. And then we'd want to see the same thing with the RSI there. As long as it stays either over the signal line, which would be more bullish, or over the 50 line there, which would be less bullish but still bullish, then yeah, we have a chance of doing what we were just talking about, breaking out of the squeeze to the upside. Look at this. The volatility is coming up kind of quick. And if we do move up to the upside, then we got to break over that 200, like I said, break over 90, and that'll tell us, hey, are we continuing this downtrend that we're seeing on the daily? Are we reversing into an uptrend? And will it take us all the way as high as this bull flag here tells us that we will go, which is 116, which, if you remember, is very close to the same measured move as the smaller bull flag on the weekly. What are the Stokes looking like here? Oh, they're still pointing to the upside here. Over at signal line. Yeah, they're in overbought, but they are here too, and they could get stuck. It's not unknown. And here, though, we are under the 50 still on the RSI. We are over the signal line, but under the 50. So we need to see it break out. Break out of this downward trending wedge. Break out of this, downtrend that we're in. Hey, we might stay in this bull flag, and then actually it might turn into a double top. But we talked about that later, and we'll talk about that again once price action gets back up to these levels. For now, we are seeing possibilities of a reversal. I am somewhat more bullish because of all of the time scales that are over the 200. And I'll point out that we are actually over the 200 on the daily now as well. And that was a bullish engulfing candle too, engulfed the last 2 days. But yeah, we're over the 200, which is at 85. At exactly 85. Pretty much exactly 85. Zoom in, make this bigger. And there it is. We're over it again. So that's good. Let's see if we can stay over it again. Because we did get over it again, 4 or 5 days ago, and then just came right back down. Didn't engulf, though. So higher low. Again, we got that higher low that we wanted. Let's see it. Let's see if this uptrend can continue. All right, music's over, huh? This one was a long one. Apologies. But thank you for watching. Music, as always, provided by Luminist, Valoa, and Sax Squatch. Got a double Luminist one there. And, yeah, you guys are awesome. Thank you again so much for watching. Much love. See you later.